Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig Strom.
All right, back on Personal Pension Radio, joined on the telephone by Pete Tentler, the financial locksmith. Are you there, Pete?
Hey, Craig, I'm right here.
Outstanding. All right, listeners to Personal Pension Radio, if you've listened to my show enough, you know that I am a fan of reverse mortgage, an often misunderstood, frequently maligned financial strategy that's great in retirement, and I love to work with Pete Tentler. Pete Tentler took care of my mom and her reverse mortgage, and my mom still hasn't killed me, so she's happy. She's super happy. So, Pete, before I jump in, I have to make sure that I give out my usual spiel. I am the income engineer. Yes, in fact, broadcasting from the Personal Pension Radio Workshop here in Southern California. My wood shop is in full build mode for my own kitchen. Yes, I am building my own kitchen countertops and redoing the whole thing. So the workshop is actually in full swing. Quick disclosure, because today is going to be a bite-size episode, maybe a little more than a bite-size, maybe a full mouthful of reverse mortgage 101 and really understanding reverse mortgage. But I need everybody to always follow the big disclosure at the end is preceded by the small disclosure in the middle. I am not a CPA. I am not an attorney. I am a paralegal at an awesome law firm, but I'm really a certified financial planner professional. And as cool as my microphone and this high-tech equipment makes me sound and the podcast airwaves and such, please do not act on things that you hear on this show as if you're getting advice for you personally. Especially, please don't act on things that you hear from financial entertainers that are unlicensed to practice in any financial capacity. Please talk to and meet with a qualified, certified financial planner, hopefully. And yes, I am raising my virtual hand right now to say I would love that person to be me. You can always email me, Kraig with a K, at kraigstrom.com. Kraig, K-R-A-I-G, at kraigstrom.com. Now, disclosure number one out of the way. Pete Tentler, you and I met, I forget how many years ago, but we met, and it was perfect timing because my mom, unfortunately, had lost my dad to cancer. And through a number of twists and turns in their life prior to him getting sick, they had also lost the ability at the time to own a home. And my mom was renting after the death of my father. She was renting a condominium here in Southern California and basically was going to be renting for the rest of her life. So I stepped in and helped her buy a house. I actually helped her with the down payment to buy a house with the specific intent that we would get a reverse mortgage as soon as she was old enough and as soon as she was able. And when that time came, let me see if I can learn to speak. When that time came, it just so happened that years earlier, in that interim, I had met Pete Tentler. And I needed someone to help my mom with a reverse mortgage. And there you go. That's how Pete came into the Strom household and helped my mom reverse mortgage out of her house. Now, what happened is she went from having a rent payment that she would have had forever to having a mortgage payment. Yes, we did a loan to buy a house originally, and then got a reverse mortgage, so she no longer has a mortgage payment. Therefore, no rent payment technically for the rest of her life. And the only downside that we've ever perceived with my mom's reverse mortgage is that my sister and I will not really inherit a whole lot of equity in her home because my mom is living on it and enjoying it, and she'll live there for the rest of her life with her Campbell soup collection, and she loves it. So that's how Pete Tentler and I met. You remember all that, right, Pete?
That was about 7 or 8 years ago.
Yeah, it's been
a long time.
Yeah, and my mom has just been, her financial life really turned around, and she's been okay. Without it, she would have struggled. She really would have struggled without the reverse mortgage and that whole chain of events. So as we get into this discussion, I have some pretty technical questions, maybe a little deep water stuff that I want to talk about, Pete, but I would love it if you would give the audience an overview of, reverse mortgage 101, if you will, kind of what is it, where is it, and kind of go from there.
Well, the very short introduction to that is consider a reverse mortgage just like your traditional forward mortgage. And I mean that by you still keep title to the home. The home is yours. When you sell the home, the mortgage is paid off and you keep all the remaining equity in the home. And then the same thing would apply to your heirs. Okay? The difference is that there are no mortgage payments required on a reverse mortgage. Therefore, instead of your mortgage balance going down little by little by little, and take a look at your mortgage statement. Every month you're making a mortgage payment, and about a third of that is going to the principal. That means it's going to take you a long time to pay that mortgage balance down.
Right. It's just taking a tiny little bite out of that every month for most people for, 15, 20 years.
Right. And if your mortgage payment is $2,000 a month, that could be a lot of money to pay off over the years that you're out of. Now, on the other hand, with a reverse mortgage, because there's no mortgage payments required, the mortgage balance goes up little by little by little. The mortgage balance goes in reverse, thus reverse mortgage. Now, at any time you want to sell the home, you can sell the home. Whatever that reverse mortgage balance is paid off, just like a traditional mortgage, and you keep all the remaining equity. And the same thing applies to your heirs. So, Craig, you and your sister, you will inherit something. It's just going to be less than if your mother were to be making mortgage payments.
Exactly. And we were fully aware of that when we went into it. And we are both so excited to see my mom, plan trips. I mean, she's gone on cruises now. She's going to go back to New England again this summer with her friend, and just things that she would not have been able to do if she had a rent payment still, basically.
And what would her life look like today if she were continuing to make that rent or mortgage payment?
Yeah, no, exactly. It would not be good. I mean, we would probably have to spend a lot more time with her.
Well, sure. And when I talk to the heirs about this, because they're the ones usually the first one to call me and say, hey, I've heard bad things about reverse mortgages. I heard that, when they die, the house goes back to the bank and there's they keep all the equity. So when you ask me, and everybody asks me, give me the overview, give me the short 15-second overview on how the reverse mortgage works, I always say this is just like a regular mortgage, meaning that you keep title to the home. Because the number one misconception is you're signing the house over to the bank. The bank pays you a monthly payment, and when you die, the bank gets the house and all the remaining equity.
Yeah, see, Pete, I have to tell you right now, before I forget, I actually had somebody that I know through my car club. So through my club is in a situation where, let's just say, she wants to do something, or she needs to do something financially, and basically she needs to sell her favorite car. Absolutely dream car her entire life. She finally got it. She knows full well she should never have purchased it because it's too dang expensive. And she really
Right.
wants to retire, and she knows that I am a financial planner, and she was asking me, like, what do I do, and should I sell it? And I asked her how much she really needed. And I said, my gosh, I guess you could consider using a reverse mortgage, and you would think that I had just invoked the name of Satan. Because she says, right? I know. She
Right.
says, oh, my friend lost his house because he had a reverse mortgage. The bank took his house. And I said, no, that doesn't happen. That's not a reality. That's the kind of stuff that I come to you and I say, gosh, Pete, how do you respond to that? I mean, oh, the bank could take my house.
Well, you know me. I'm out there every day having meetings, breakfast meetings, lunch meetings, networking meetings, and I get that every day. Isn't it a bad thing? What happens when they die? You're cheating the children's inheritance. I hear that.
Yes.
And when I explain it to them, they look at me, and what I'm talking to this time are mostly the professional advisors, the lawyers, the CPAs, the financial planners. These are the ones that tell me, I hear these things are bad. I hear it's a ripoff. You're cheating the kids' inheritance. And after I explain it to them, there's a long pause, and they say, I wish I knew about this before. And I say, before what? And they say, well, before my client had no other choice but to deplete their entire retirement account.
Yes, exactly. And that's where my friend is right now.
Or in another situation, they had no other choice but to sell the home and move in with their adult children.
Yeah.
This is the same guy that said you're cheating the kids' inheritance. Well, this could have kept them in the home. And this one case, the mother and the son-in-law don't get along. And most of the time, the mother-in-law stays in her room all day long.
Ugh.
What kind of a retirement is that?
Yeah, that's just like being a prisoner in a house.
Yeah. And then every once in a while, it hasn't happened in a while, but once in a while somebody says, I had a client that had asked me about this. I talked him out of doing it. And a couple of years later, he lost his home to a foreclosure. And now I'm realizing, had I known you, we could have saved the home.
Yeah,
and this was an attorney charging.
Yeah, and that was an attorney. I remember you had shared that with me, an attorney who had that kind of terrible realization of, oh my gosh, I didn't know what I didn't know, right?
Right, and I'm wondering, and I didn't say this, but I was wondering, how much did he bill that client for that wrong advice?
Aye.
So my goal in the reverse mortgage industry is just educate the homeowner, the adult children, the professional advisor, legal wealth advisor. Just give me 15 minutes to explain how it is. And then you decide if it's still a right fit or not. Sometimes it isn't. But when you go into it, thinking that this is some three-headed monster, think again, because you might be missing opportunities to let your mother live with dignity and not have to move in with you, and to be independent and be able to give fresh, strong advice to your clients.
Yeah, my mom would be living probably with me or my sister someday, not too long in the future, had she not been able to get the reverse mortgage, which basically put her in a position to be able to live independently for the rest of her life. She is in a single-story home. Those, again, people who know me, who listen to this show, the perfect reverse mortgage house is the house you can die in. It's a single-story, level entry, smaller property that you can get your rascal scooter in the front door or the garage. right? And I'm serious.
Very good.
You got to make sure that you can get the rascal scooter in the front door. You may not remember this, Pete, but when my mom was shopping for a house that we would be able to then someday reverse mortgage, I told her what the guidelines were. I said, I'm going to help you, but these are the criteria. You got to be able to get the scooter in the front door. It's got to be single story. And she kept sending me links to 2-story houses. And I kept sending her the message back, what part of single story are you missing? So let me ask you, on this basics conversation with reverse mortgage, there is a big item out there that a lot of folks miss. And I want to tie this into my follow-up question, but it's this idea of reverse mortgage being one option. You get a mortgage. Well, there's this option out there called a line of credit. And I've talked to folks about this all the time. Matter of fact, my friend from the car club, I told her about the line of credit. I would love for you to give us just some basics. Again, tell us how the heck does this work? You don't just have to do a cash out, right?
No, that's exactly right. So many people in your audience, they're homeowners, they have a first mortgage, and some of them have a second mortgage called a home equity line of credit, or HELOC. Okay, so that equity line of credit is there for them to borrow in case of emergency. This is the home equity loan that you get from the bank, the HELOC.
Right.
And
in California, most of us have 4 of those, right?
There's some big mortgages out here. And again, that's a traditional mortgage. You sell that, you pay it off, and you keep all the remaining equity. The reverse mortgage has an option of a credit line as well. And it works just like the HELOC, second mortgage, but differently. You only owe what you borrow. So with a reverse mortgage, you're not required to take money. You're not required to take a lump sum or monthly payments. You decide how you need to use the money, and it's all up to you because it's your equity. So you might have a reverse mortgage equity line of credit with a low balance or a $1 balance. And as long as you're living in the home, that credit line is available to you. Now, that's a big differentiator than the HELOC, because the HELOC is only good for the first 10 years. So you have a HELOC that has an equity line of credit. You borrow on it as you need it. But after 10 years, that credit line closes, and then you have to make full principal and interest payments for the next 20 years. Here's another big difference between the reverse mortgage credit line and the home equity credit line. Remember, the key feature of a reverse mortgage is there's no more mortgage payments required. Therefore, it's a lot easier to qualify. So let's imagine you have a 65-year-old client. They're still working. They've got income. They take out a home equity line of credit from the bank that they qualified for, and maybe they got a credit line for $100,000. Well, 10 years later, they're 75, retired. They don't have the income that they had before, and their credit line's about to close. If they want to get a new credit line, they have to qualify. It's going to be more difficult for them to qualify when they're only having Social Security income.
Oh, exactly. So they might get stuck up against a hard place with an equity line that was out there back when they could qualify. I gotcha.
Yep. So again, this is another one of these, I wish I knew about this before, and we hear this now from the homeowner. And the big part about the reverse mortgage credit line is that it has a growth feature. And the growth feature means that the credit line will increase every month at annual rate of whatever the interest rate is plus the mortgage insurance. So currently, that growth rate is 4.25%.
Now let me,
so if somebody had a 200,
let me jump in and really make sure to clarify this, because this is a huge, huge thing. So right now, when you're hunting for a place to put let's say $100,000 in a CD for 1%, or hunting for a money market account that maybe out there on the internet they're doing 2.25%, right? And yet people are sitting there in their home that is maybe paid off, and they might have $200,000, $300,000, $400,000 of cash money in the walls of their house. And you're telling me that if you had an equity line, you don't even have to take all the money out. If you had an equity line, it would sit there and the equity line would grow at 4.25 under the current conditions?
Under the current condition, right? That's right.
Wow. Yeah, see, well, that's amazing. That's twice the going rate for, cash accounts, and you don't even have to cash the money officially out of your house to get a hold of this growth rate. That's amazing.
That's right. Now, this is something where when I explain this to people, they give me a what? They don't understand. So I go over it again. And I'd like to go explain it to you a little bit more in detail. So let's assume that you have a 65-year-old client and they get approved for a $300,000 line of credit on the reverse mortgage. Okay. Left untouched, that credit line is going to increase at the ongoing interest rate plus the mortgage insurance at 4.25%. That $300,000 in 10 years becomes $458,000. In 20 years, now your client, okay, your client, Kraig, your client, in 20 years, that credit line is now it is $700,000, and the borrower is 85 years old. Now, my parents, who are not with us any longer, when they were in their mid-80s, they needed full-time in-home care. And California has some of the most expensive in-home care rates. It costs $15,000, $20,000 a month.
Wow.
Now, now I have a question for you. How much would it cost for a 65-year-old to have some type of long-term care insurance? And how much would they be paying in premiums over the years? Whereas instead you said,
even come close to what you're describing for a long-term care type coverage, a pool of money like that would cost thousands and thousands of dollars a month, and they'd have to start it early.
Right. And instead you said, let's start an equity line of credit with a reverse mortgage. You can have a few out-of-pocket closing cost expense, but in 20 years, you could have $700,000 available to you. And at $15,000 a month, that's almost 4 years of full-time in-home care, which they probably won't use. But this is their new long-term care policy, and you ended up looking like a genius to the client and to their heirs.
Oh, for sure.
Who said thank you, because the heirs don't want to be on the hook for, they may not have the financial resources, they may not have the time to help mom and dad out, and maybe they just don't know how to do it physically.
Yeah,
so
it is a daunting task to take on that kind of a role as a caregiver, but the financial cost, this is such a game changer in the conversations that I have with my friends, my clients, anybody who is in a situation similar to this, where you've got moms, dads, uncles, nephews, you got people that are, wherever they are. This concept cannot be understated. The idea of long-term care insurance, I listened to someone recently complaining about their long-term care insurance premiums going up 80% increase. 80% increases, right? And this can be built in. You have folks who say, no, I'm going to give my kids a paid-off house. Well, good. Just get yourself a line of credit. Let it park there. A line of credit reverse mortgage. Let it park there for 15 or 20 years. Fine. Never use it. The house still goes to the kids, and you didn't use up any of that extra equity. You have a stroke, and your kids need to fork out 10 grand a month, 15 grand a month to take good care of you, wouldn't it be awesome if they had that built into the reverse mortgage on the house, let's face it, that they're going to sell anyway when you die? Right?
And again, if it wasn't in place at age 65 and he has a stroke at 85, and now they want to take out a reverse mortgage, they would have seen that they would have lost all that growth in those 20 years. And then those heirs would say, I wish we knew about this before.
Yes.
So
exactly.
I keep hearing this over and over again. Why didn't somebody tell us about this before? Why didn't our attorney tell us, or our financial planner, our CPA? I wish they would have told us about this. Then we wouldn't have to worry financially about how to take care of mom and dad's in-home care costs.
There's another one in there, Pete, another professional in there that needs to hear this over and over again, and it's real estate professionals. Real estate professionals, realtors, often don't know this stuff. They do not understand the reverse mortgage program, and that's going to lead into a question that this next question that I have for you and that I want to talk about. And I'll tell the story.
Mm-hmm. Okay.
I was introduced to a sweet lady that lives right here in our area where I live in Southern California. And I was introduced to her by her neighbor, who said, please, please, please meet with my neighbor, Louise, right? So Helen, my client, said, please meet with my neighbor, Louise. She is so financially strapped. She said, don't tell her that I noticed, but she has plastic flowers in her flower bed because she can't afford flowers. Okay? Oh, it killed me. She's 78 years old. She had lost her husband a full 10 years earlier to, I believe, a heart attack. She's been alone for a decade, living on very modest Social Security income. That's it. She had a paid-off house, but she couldn't afford more than plastic flowers. I suggested, oh my gosh, we really should talk about a reverse mortgage. Her first thought was, I don't know. She didn't really have any negatives. She said, I'll have to talk to my daughter. She's a realtor. Okay. And we scheduled a meeting together. And her daughter, Brenda, sat at the other end of the table with her arms crossed, looking at me as if, again, I was here to kill someone, right? And she was so mad, like she was waiting to just let go on me. And what I suggested was, as I wrapped up, and I said, okay, Louise, the reverse mortgage for purchase would allow you to sell this house. And if only you knew a great realtor who could sell this house, and then you could use a reverse mortgage for purchase to buy a smaller house that would be easier for you to maintain. And I think you could be able to get some cash out and buy some real flowers, for crying out loud. Her daughter, at the end of the table, you look at the color in her face just went away. She leaned forward and said, you can buy a house with a reverse mortgage?
Yeah.
She's a realtor, and she had no idea. Within a month, Louise's daughter had now sold her house and helped her buy another house, and realtors get paid commissions. Sure thing. She got paid.
Right.
And they did it with a reverse mortgage, and it was amazing to see the change in Brenda. She had no idea. So tell us, Pete, how in the heck does a reverse mortgage for purchase work?
Okay, so great lead-in. Remember we said earlier, okay, think of this just like your traditional forward mortgage, okay? You identify a house, you buy the house, you go into escrow, you put a down payment down, and the mortgage company finances the difference between the down payment and the purchase price. The same rule applies with a reverse mortgage, except because it's a reverse mortgage, they're going to have to put a little bit more of a down payment. And if I remember with that couple several years ago, that family, I think she put 40% down and they financed the rest. So if she were to, I can't remember. What did she buy? 350,000?
Somewhere like that. I'm just now forgetting. And then, she lives in a nice little, actually, one of the few retirement type communities left in the world today.
So she put down a down payment that she got from the sale of her home. She put down, what did she put down? 350. She put down 140. She put down 140. We financed the rest in a reverse mortgage. And she actually kind of upgraded because she was in a better area, a newer home, but she just didn't have the $350,000 to pay all cash.
Exactly.
So that's the only way you're not going to have a mortgage payment. You pay all cash or you use the reverse mortgage for purchase. So she was able to pocket more money, not having to put $350,000 down, and she has no mortgage payment.
And she has real flowers in the flower beds now.
I forgot about that. Yes, she does. She does. But you see, these things come up often because being in the lending industry for over 25 years, we're always working with realtors. And I think they do a very good job. It's hard work. I wouldn't want to be a realtor. I just think it's a lot of work holding open houses, driving people all over the county. But their specialty is marketing the house, not understanding the financial aspect of it. That's where the mortgage brokers come in. So when you have them not really understanding, most of them not really understanding fully on mortgage options, and then the reverse mortgage, when I mention that, they look at me like I just landed from another planet.
Exactly.
So I didn't know we can do that. So here's an example. Here in San Diego, it was about 7 or 8 years ago, there was a couple in a community called Poway. They were in their late 60s, early 70s. They wanted to retire, and they're in this big house that's worth $800,000, but it has a $500,000 mortgage. So I know you got listeners all over the nation. So San Diego is very expensive. It's very difficult to find a home in San Diego County that's $350,000. Okay, they exist, but you don't go from an $800,000 home in a very nice area to a $350,000 home in a not so nice area.
Exactly.
They just wouldn't do that.
Yeah, for my listeners in Kansas right now, you did hear it right. An $800,000+ home is probably 3-bedroom, 2-bath on a postage stamp yard in San Diego County.
Yep. Yeah, they're. I think their home was like 1,800 or 1,900 square feet, but it was in a great neighborhood.
Yeah,
great schools.
Now, one more thing, Pete. It's important for everybody to understand that all of these numbers are relative. The reverse mortgage works. It works wherever you apply this. So don't get turned off or immediately just tune out because you hear $800,000 house. It works in $200,000 neighborhoods. It works in $300,000 neighborhoods. It works. And we're going to talk about it in a quick minute. It works in houses even more expensive than that. But please tell us, how did this turn out? They had a $500,000 mortgage. How in the world did that all turn out?
Well, the only option they would have to buy a home that was all cash was to be moving 75 miles north up into Riverside County, a place called Menifee Lakes. Very nice area. I've done loans in Menifee Lakes where homes are worth $300,000, $350,000. So it's not that far out of San Diego. It's about 85 miles away, so an hour and a half drive. And they went up there and they just said, why would we compromise on where we are living when we've been in San Diego for 30 years. Our kids are here. Our grandkids are here. All our friends are here. It's just not going to happen. So maybe we'll never retire. I met their CPA, and their CPA told me their situation. And I said, they can buy a home for about $550,000 and not have a mortgage payment by using the reverse mortgage to finance. And I think we financed 55% at that time. So they had plenty of money, even left over, to do this. Now, there was a wrinkle in all of this. The realtor who they knew from, a friend of a friend, called me and told me, you can't use a reverse mortgage to buy a home. I said, no, you don't understand. I'm a certified reverse mortgage professional. Been doing this for 15 plus years at the time. It just doesn't happen. So the borrowers, Mark and Monica, they decided to fire her. They hired somebody new, and that guy got it. He got it, and they bought them a nice house, 55 plus community on the golf course.
Nice.
But now, what was interesting was the daughter called me. The daughter was 30 something, and she had that same reaction as a lot of the years do. What is this? Are you ripping off my parents? Are they going to lose their house in the end? On and on. And I go, Jen, here's how it works. And she said, all right, I understand it. It's a good product. It's safe. What's the catch? I go, here's the catch, Jen. Because the balance goes in reverse, remember we explained that earlier, the balance goes up, there's going to be less equity for you to inherit. If you are depending on that home's equity for inheritance, you might want to tell your parents to do something else. And she said, and this was great, she said, we don't need inheritance. What we need are babysitters. My husband and I, we need a date night on Saturday night. We want to sleep in on Sunday. My parents pick up the kids on Saturday morning. They spoil them. I don't care what they do. And then they bring them back Sunday night, and we are all batteries recharged. And she says, there's no way we can do that if they're living 85 miles away.
Right.
It just doesn't happen. And she says, this is a great idea. My parents had that big mortgage payment, all the costs to maintain that house. And this is great. When can it get done?
Oh, that is outstanding.
So it turned out to be a great product. I invited myself to their new home 3 months later, and the husband said, hey, you know what? This house is just the right size for us. Very low maintenance, it's easy to do. And the wife said, and we didn't have to compromise on where we would be living.
Oh, beautiful.
So the reverse mortgage for purchase allows you to right size without compromise.
Oh, that is
and
such
realtors,
a good way to put it.
Realtors need to understand this because they've got empty nesters that say, I wish I could get them to sell their house, but they've got this big mortgage on it. They're never going to leave. Well, if you knew about this, you can get them into the right size home, and they don't have to move out of the county. They don't have to move out of the state. They can stay right here, get a reverse mortgage to finance the purchase of the home, pocket some money, and best of all, no mortgage payment.
Absolutely. And for realtors, it's actually 2 transactions with 1 client. It's built in most cases.
That's right.
But I have an additional piece that this happened with a CPA that I actually know that we were having similar discussions. And my point to this CPA when I talked to her was the reverse mortgage for purchase and the reverse mortgage in general will often help your clients stay in your vicinity. If they have to leave, you're losing a client, right? Older clients don't necessarily want to work by mail or telephone. And if they have to leave your area because they can't really afford to make it work, they can't right size, you lose a client.
Right.
So it was an eye-opener for my CPA friend when she thought about it. She thought, oh my gosh, most of my clients are baby boomers. She said, I need to make sure that they know about this reverse mortgage. Keep those clients close to home.
Right. Right. And let's touch one more spot on that. We're talking about the heirs again. Okay, in this conversation about reverse mortgages, are the heirs getting ripped off? What are the responsibility for the heirs? What are they getting? Hey, Jen and her husband are getting babysitters that they would have lost had they moved out of the area.
Yeah, absolutely.
Keeping the family close together, you can't put a price tag on that.
Well, and I'll joke about it, but in all seriousness, my mom would hate it if she had to live in my backyard. So what I get out of the reverse mortgage is I don't have mom in my backyard.
and you know what? That's believe it or not, that comes up quite a bit. When the family, the adult children like us, are helping mom and dad out with a mortgage payment, whether we can afford it or not is neither here nor there. it's usually their spouse that says something like, just the principle of that money not staying in our home for our family needs, whatever it is, college education, vacations, just for themselves. And that money's going to your parents, and then the couple fight over that. Then we get a reverse mortgage that says, we'll eliminate that dilemma in your household. Okay? You no longer have to fight over your husband sending money to your in-laws. Okay? You can fight about other things, but that fight is over.
Exactly. Well, listen, I'll tell you what, this is, once again, I love talking to you, Pete, about the reverse mortgage. I learn new things. There's always a few things that I pick up as reminders in there. For my audience, we are going to do this again. We're going to do some bite-sized video interviews, snippets for our YouTube channel, my vlog. I've started a vlog on YouTube. You can find it under Kraig with a K, Strom, Personal Pension Radio, etc. Pete, thank you so much for joining me. Audience members, everybody listening, please, there are so many things that are misunderstood or misrepresented about reverse mortgages. Bottom line, yeah, they're not for everyone, but anyone who says flat out, oh, those things are terrible, they don't know what they're talking about. They really don't. They are completely full of it. That is a certified financial planner term, definition, completely full of it. Pete, how can people get a hold of you if they have questions for the financial locksmith?
I love the phones. So in all this technology, pick up the phone, give me a call. My phone number is 858-999-1776. I'll answer all of your questions. I'll ask you some questions about what your goals are. And again, together we can determine if this is a right fit or not, because like Kraig just said, sometimes it's not the right fit. So I'll give you the facts without the hype. There's no obligation. If you want to drop me an email, you can email me at pete@reversemortgage1776.com.
Reverse Mortgage 1776. I like that.
Yep.
That's fantastic. Pete, once again, thank you so much. Listeners to Personal Pension Radio, as always, thank you for being here. Thank you for sharing. Thank you for sending your questions to me via email. I love having topics to discuss. Look for the next vlog entry and podcast entry coming at you soon. Take care.
Thank you for listening to the Personal Pension Radio podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you're there, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening. Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.